Now that we know why we want to invest, the next question is, why do we want to focus on investing in stocks, which are just shares of ownership in public companies? But the reason we want to invest in companies within this video specifically is that it's very accessible, it has predictable returns over time, and it's very liquid. When an investment is liquid, it means you can convert that investment into cash without much trouble. If you buy a house for $500,000 in cash and you wanted to sell the house next week and get your $500,000 back, it's not going to be really easy. You would have to typically list the house again, you would have to find a buyer, and then go through that whole real estate process, which usually takes at least 30 days. Real estate in this case is not very liquid. However, buying a stock on the stock market is very liquid. You could buy a share of Coca-Cola stock in the morning and sell it in the afternoon and get your money out. In terms of predictable returns, earlier I said that the stock market as a whole typically returns 8 to 10% per year as an investment. So for example, if you had $100 of your hard-earned money in 1980, say you were alive back then, and you left it invested in the entire stock market, which you can do with an index fund, it would be worth over $17,000 today. Adjusted for inflation, $100 in 1980 is worth $393 today. That means your money has still gone up in value 44 times more than inflation just for investing, and that's pretty cool.